is Stavros Tousios for M4Markets. Good morning, everyone. I'm going to have a quick look at gold and the S&P today. Prices of gold, as we know, of course, we do have a divergence. Last time we saw it, we talked about this potential move to the upside after the retest. We're looking for 1975 because this is the next Fibonacci resistance that is actually important. We didn't get there, and we keep seeing more divergences popping in. Right now, why are we here? We are here because we have retested that upper channel as a support, and prices have now started to consolidate. So there is two potential scenarios here. One, this attempt is going to be invalidated at some point, and we're gonna probably go below the back to the 61.8 again to see whether we can then continue higher, or maybe the high is in here for now at least, and then we go lower for 1843. Or the other case is that we are going to maintain that acceleration to the upside, and we're going to break the previous high at 1950 and head towards 1975 without another attempt at that low. Now we are consolidating here, and the truth is that we still do that while we're biased up as long as we remain above this trend line. So if we are able to stay above 1915 and potentially also looking at something like of a potential running triangle here, then we could see prices moving up rather than down. But in case we revisit the previous low over here, it would also mean that apart from having, of course, a double top, a double bottom, it will mean though that we have re-entered that channel. It means that we return to the base trend, and that might open the door all the way down to the previous channel. Of course, the 61.8 is one of the levels that we need to switch, to flip first from a support to resistance. For now, though, any sort of downside is very likely to find support at the 61.8. Now, if we're looking at the S&P and look at the 4 hours, it's remaining above this bottom, I would say not bottom, like the descending trend. It's broken outside. Doesn't mean we are in an uptrend right now in the medium term, but we are probably in the short term, right? So you can see that clearly over here. We've had this divergence popping. I think we've talked about this decline. It was very shallow, to be fair with you. And we are now back above the 4K, and the 4K handle is very, very, very important. But again, we see another signal popping, and that would be the second one on like in a row. So you've got 1 and 2, and then you've got 1 and 2. And both of them also form signals with the peak over here of the RSI. Okay, that means that we might be due a pullback, if not a reversal as well over here on the S&P. Okay, and what we could do is draw a channel over here as well. You see that we have kind of found this. Maybe we missed it for a little bit, but what I am actually trying to say is that the price action to the upside is getting quite restrictive, with another leg up potentially finding resistance at the channel top over here around 41.50 or so, and that might be actually where that will be the last attempt to the upside, at least for now, as long as we remain above 40.60. The moment, and this is very close, that we're going to find very close, we going to overlap that 40.60 level, then we are going to open the door for the 4K once again. And then once we enter this territory, the next leg to the downside is probably closer to 39.60. You see that this signal can also be seen on the RSI in the 1 hour, which makes it a bit more like biased to the downside. So we are very near to finding out what the trend might even be for the day, because this is not only going to be a triple bottom over here with these two bottoms, but also giving us a retest. And if this retest is successful, then we ought to see fresh multi-month highs. But if not, and we get a violation, then off we go back down within the bearish trend probably once again.